It's just recognizing value. When we recognize the idea of value, we're always asking about our value lines. One of the key components of value lines, of course, is what we call relative value, but it's a different conversation than the value we're talking specifically from a profile point of view. The value we're talking about from a profile point of view is we're talking about the value areas. We're talking about the movement of price value. And obviously, when we're talking about the movement of price value, we have a very simple process to use for that movement of price value. It's called the transforms. This idea that we're transforming a frequency into a tradable response. Max was short, very easily short, from the cash open there. You might have seen it for yourself. So if we take a look at that short sell from the cash open, again, not really particularly surprising, but let's take a look anyway. And we can see we've got Max on the screens here. This is just a basic standard Max narrative. It's quite obvious that we have an asymmetrical sell coming in, correct? This sell here is quite obviously asymmetrical selling. Does everybody get that? Everybody agree with that? So following that asymmetrical sell, we're going to be wanting to be selling this, right? So that's the first thing that we're always going to be wanting to do is get short. So as soon as we see that asymmetrical sell, we've got two ways of being able to get short. We can see the sell coming in and we can see that the asymmetrical sell originated from this location here. So there's a possible target price for short selling it. And secondly, we could obviously try and measure it on a probability scale, which is obviously the break of that line, which is, of course, this big one single candle here. And obviously popping a little sell into there in terms of probability distributions makes a lot of sense. Why? Because it's at a lower price. That's the point. We're not selling a top edge here. We're not trying to guess about the existence of a top edge up here or up here. We're selling it below the 50 line here. The probability should never be sell side below the 50, should it? The sell side should always be basically based around that supply-demand line, the supply-demand economics 101 conversation. So bearing that in mind, this is nothing but a sell. It's going to be a sell. One of the things we can also then do is we can recognize the importance of collecting the dealer's keys. For example, 5570s would obviously catch your attention because it's the dealer's key involved in this sell side process. And what we want to do is we want to get into our equity indexes and ask that question: what importance does 5570 have on my screens? So obviously we can look at that and say, well, not a lot of importance. There's not a lot of buyers, there's not a lot of sellers. The buyers don't really show up until 5590, to be honest. And we obviously are below the 5575, which is where the sellers come in. Well, the next big sell order comes in at 5550, doesn't it? Look at where the buy came in, guys. You see where the buy came in? The next big buy order comes in, or sell order comes in at 5550, which means the buy order is going to be 5950. It's a massive surprise to everybody, isn't it? Massive surprise. There's your target price. I'm talking to myself. So here's a sell trade here. So there's the sell order that you buy from. There's the sell order that you've been buying from there. 5550. It's the only one that's got it. So you can see the sell comes in. Beautiful trade, beautiful profit. Well done. $1,000. End of story. Now, what else could we obviously do? Well, we've obviously got this idea of adding in the market makers. From the 1400 hours top edge here, you can see the market makers have all been sell side. How do we know the market makers have been sell side? It's based on the arrival of volume frequencies, not price frequencies. There's two different types of frequencies. You can have an arrival of one lot trades, or you can have an arrival of 50 lot trades. So obviously when we get an arrival of large size generally signifies commercial operators. And when you see the commercial operators are selling in this area, there's a fair size gap coming in. we know that there is a very good chance to bring that short sell into play at that stage there. The sell works away beautifully based on that story, and it stays market maker short or commercial short. And obviously that's taken us all the way down to the bottom line price here. Another perfect read off of Max during that period.